again. Welcome to another episode of What's New About the Tax Law. In the previous episode, we discussed about how the new tax law came to be, including the brains behind it, the reforms that has reshaping the Nigerian fiscal system, and the consultations, negotiations, processes, and various challenges they encountered. Today, we'll be looking at the legal structure of this new reform compared to the old tax system. What was revoked? What was modified? What remained untouched? Now, when the National Assembly finally passed the new tax reform bills, they did not just make a few small edits. They completely knocked down the old system. To build a simpler, fairer future for Nigeria, the experts had to clear away a massive jungle of confusion, outdated laws that has been holding the country back for decades. For years, Nigeria's tax system was a mess. There were too many overlapping rules, making it exhausting for the businesses to grow and confusing for everyday people to know what they actually owed the government and what they're entitled to. In the core of this entire cleanup is the Nigerian Tax Bill 2024. To stop the confusion, the government completely wiped out 12 major standalone tax laws. They simply did not exist anymore. The specific laws thrown into the trash include the Company Income Tax Act, the Personal Income Tax Act, the Value Added Tax Act, the Capital Gains Tax Act, the Stamp Duties Act, the Petroleum Profit Tax Act, the Deep Offshore and Inland Basin Act, the Industrial Development Income Tax Relief Act, the Venture Capital Incentive Act, the Taxes and Levies Approved List Collection Act, the Casino Taxation Act, the Income Tax Authorized Communication Act, and on top of that, a handful of confusing side rules and special tax holiday orders were also cancelled. To make sure no old laws could fight back, the committee put strict supremacy clause in the new law. It basically says that the new act is the ultimate boss of taxes in Nigeria. If other laws try to argue with it, the new law wins, and the old one is completely void. The cleanup did not stop there. The reform also trimmed the powers of 14 other existing laws. In the past, if you ran a company in Nigeria, you were constantly harassed by different government agencies demanding separate funds. You had to pay an educational levy to one agency, a tech levy to another, a science levy to a third, and a cybersecurity fund to a fourth. It was just a nightmare for business owners. The new law strips those separate collection powers away from those individual agencies. Instead, everything has been rolled into just one single development levy charged on company profits. Now, businesses make one clean payment, and the government automatically splits the money behind the scenes. Tertiary Trust Fund, TED Fund, 50%, Nigeria Education Loan, NEL Fund, 15%, National Information Technology Development Fund, NITDA, 8%, National Agency for Science and Engineering Infrastructure, NASENI, 8%, National Board for Technological Incubation, 4%, Defense and Security Infrastructure Fund, 10%, and finally, National Cybersecurity Fund, 5%. This means that the new law allows you to make one development-related payment and zero multiple agency harassment. Isn't that great? Now, what does this new legal update to the tax law mean for you and me as income earners and business owners? For the everyday citizen, the personal income tax system is now significantly kinder to low-income earners. If you earn 800,000 or less a year, you are completely exempted from paying income tax. Under the old rules, even people making a tiny 300,000 naira a year were forced to pay a 7% tax. Additionally, the old minimum tax rule has been abolished too. In the past, if you made no profit or have no taxable income, you were required to pay 1% your gross earnings as tax. Now, if you don't make enough money to be taxed, the government simply leaves you alone. Also, the rent relief allowance has now replaced the old and complicated allowances. If you rent a place to live, you can now deduct up to 500,000 or 20% of your annual rent from your taxable income, giving your wallet some breathing space. But it's not a straight walk. You have to show your rent payments with evidence. And if you own your own home or live rent-free with family, you can't claim these reliefs. Then, for businesses, the changes represent a major compromise. The tax committee originally wanted to lower the standard corporate income tax rate to 25% to make Nigeria more competitive. However, lawmakers in the House of Representatives rejected that drop. Because of this, the standard corporate tax rate stays at 30% for companies making 100 million or more in a year. The law also eliminated 20% tax rate for what some may consider medium companies, compressing businesses into two groups, small companies and other companies. To balance this out, they stretched the threshold to qualify as a small company and pay an absolute 0% corporate tax rate from below 100 million in annual turnover. However, note that if you run a professional service firm, like a law firm or a consultancy, you can't claim small business status, no matter how small your earnings are. This prevents wealthy professionals from hiding behind a small business shield. By wiping out 12 old laws, stopping agencies from bullying businesses, and setting clear, simple rules for individuals, Nigeria has finally cleared out the legal jungle. But destroying the old system wasn't just done for fun. It was a matter of economic survival. What exactly do the architects of this law expect this new machine to deliver for the country? How do they plan to double Nigeria's revenue while actually giving massive tax breaks to the poor and small businesses? In our next and final episode of this series, we will look at the grand expectations of this consolidation. We'll break down the mathematical calculus. We will break down the hidden relief codes and how this unified framework is designed to finally unlock national prosperity. For more breakdown like this about the tax law, follow us on all our social media platforms as displayed on your screen and subscribe to our YouTube channel. I'm Dolapo Obafunmi. Stay tuned. See you in episode 4.